Today, there are two related topics. First, highlighting the necessity of due diligence and reading the filings, not just performing physical sleuthing. Then, a follow-up about where we are today in the market or the value of gray hair for an investor. First, the importance of due diligence. Early last year, I noted here that INMED, INMD symbol, had all the requirements for a long-term winner: high return on capital, high gross margins, and high sales growth, coupled to a market dominance in its niche. In sleuth terms, it had a high Q for quality, but it was also selling then cheaply, that is, high V for value. EV, enterprise value, was low in relation to EBITDA. I said then it is worth sleuthing. The stock was then at the low 30s. For a while, after the mention here, the stock went sideways and up. But then, in a second clip, on June 29 this year, I noted that the sleuth must not neglect following the corporate filings, not just do physical due diligence. As an example, I pointed that INMED just approved the issuance of a lot of new shares. Such approval, I said, often predates buying another company with the new shares, or just indicates less confidence in the future. It was time, I said, to be cautious about INMED. The stock was then around 37, above when it was first mentioned. And what do you know? Just last week, INMED warned that sales won't be as good as anticipated. The stock promptly plunged to 21. So was it a timely caution or what? Sure was. What about now? Well, INMED is still the same dominant company in its niche and will likely do better. So the stock probably presents excellent value here again. Of course, all of this subject to your own due diligence of the company, both physical and do the filings. And now for the second part of this clip, timing and the importance of gray hair. You probably noted that INMED is in Israel, a country now undergoing both political and military turmoil following the murderous attack by Hamas. What did just take place? To recap, Hamas, a collection of lowbrow Nazis in the Gaza Strip, launched a surprise attack and butchered more than 1,300 Israelis and wounded 3,000 more. That has now resonated all across the world. But what is less known is that Hamas attack may have screwed up the long-term plan of Iran, its master and sponsor. That's according to my sources. In what way? Well, Iran has been building up its proxies surrounding Israel, Hamas in Gaza, Hezbollah in Lebanon, Palestinians in Israel West Bank, and also Houthis in Yemen. Iran's plan was to bide its time, then launch a surprise attack all at once by all its proxies sometime in the future. Hamas, however, jumped the gun and attacked on their own. So now Iran has one less strategic tool to use, and Israel has more time to prepare. The attack in Gaza was about 2 weeks ago. It took a few days, but eventually these lowbrow Nazis were repelled by the results for the Israelis. In the next few days, Israel is about to launch an attack of its own, with the US partly supporting it. It will likely surprise the world again, in my opinion, as in 1973. Now, what about Israeli stocks? That will take some time to figure out because of the political corruption in judicial circles in Israel. I mentioned all this in my May 14 clip when I told you it's not yet the time to be bullish on Israeli stocks. However, the implication of the current wars, both in Israel and the Ukraine, is becoming clear. More and more, it seems to me, it appears that we are at a major market bottom, just like 1982 and 99 were. Or rather, the bottom this time happened in October, November last year, when I warned you not to be a lemming and not to sell. See my clip of June 24, 2022. In short, in my opinions, the wars raging today and the onset of recession make the bottom even clearer, because it's always best to buy when recession signs are clearest, especially when a major war is happening in the background. How sure am I? Let me show you a chart that my private AI, helped by my gray hair, points to as very important today. You can freeze the screen to see the chart's details. Let me show you. As you can see, the possibility of recession was highest on November 2022, when I told you not to be a lemming and not to sell. A similar probability level were in March 2009 and April 2020, both of which were major bottoms. The first at the bottom of the financial crisis, and in 2020 at the bottom of the virus crisis. To sum up, what then are the market prospects now? As I said several times during the last few weeks, I think we are on the verge of a big rally aided by three factors. The first, Janet Yellen's irresponsible printing of T-bonds, which she sells for cash to support the market and help her political friends. Factor two, on top of this avalanche of new money, there's a huge cash hoard of institutions of cash. Both would act as a rocket fuel to the market as the institutional investors pile in not to miss the coming rise. But three, there's a general despondency and fear in the market, both to fear of crash and the ongoing wars in the background. All these are, in my opinion, a strong indication that the market can rocket up even as the fear is highest, especially because the fear is highest. Now you may say, why should you pay attention to all of the above? I have only one answer. Go back over my videos of the last few years and see how my views held up in reality. Were they right or were they wrong? See for yourself. If you like the above, please subscribe. Then retweet to all your followers and subscribers so they subscribe too. And buy my books, especially the last one, The Advanced Wealth Investor. And if you want to know more about how the Middle East works, buy also my latest thriller, The Undertaker's Daughter, and see for yourself. If I may quote an actual reader's review of it from Amazon, the story is set in the dark world of Israel's secret assassinations unit, skillfully combining real historical event with a murder thriller and a political intrigue that will keep you turning the pages. Now, what's relevant in the book? What's relevant in the book is that it tells you about a region where wars have taken place for thousands of years, again and again, but where merchants were always coming back to the market right after the war ended. Wars come and go, the merchants remain, and so does the stock market. That's it for today. I'll see you next time, and meantime, thank you very much for watching.